Hi, everyone. My name is Ashley Stanhope. Thank you for joining us. I'm the Director of Communications at Ether Capital. We're a Canadian company and leading access point to the Ethereum and Web3 ecosystem. Really excited to be hosting this event today with Sam Bankman-Fried, founder and CEO of FTX, and Brian Mossoff, CEO of Ether Capital. I just have to run through a quick disclaimer on our end and a couple of housekeeping items, so bear with me here. I'm just gonna share my screen for you. Okay. So the discussion is going to be about an hour, and we'll try to get to as many questions as possible. So please put them in the chat box. Brian and Sam are going to touch on several topics throughout the event, including the latest development in the space, the current state of the markets, regulation, and Sam's work at FTX. This event is for educational purposes only, which means we're not here to provide investment advice or make product recommendations. And the views expressed by Brian and Sam are their views and may not always or necessarily represent the views of the companies they work for. We're also recording the session, and we plan to live stream it on YouTube as well. And I'll publish it to our YouTube channel afterwards. So with that, I will hand things over to Brian.
Thanks, Ashley, and hi, everyone. I'm broadcasting, I guess, here from Permissionless in Florida, which is a crypto event. And Sam, I don't know where you are right now. You're in Bahamas?
Yep.
So thanks, everyone, for joining. We're going to kind of cover everything to do with the space, some about FTX, some about crypto, price volatility, where things are at, and what maybe the next leg of crypto is going to be. So Sam, why don't we just start talking about, what you were doing before you entered the space and what attracted you to crypto in general?
Yeah, so, before I got into crypto, I was, I was at J Street Capital trading international ETFs. I left feeling like there was a lot of things I wanted to try doing with my life. Not sure exactly what all of those would end up being. And, first got involved in crypto just because there is, huge interest, huge volatility, and a lot of signs of, a market that probably had a lot more liquidity demanded than supplied right now.
And so what was your first idea of what you could do in the space? Was it immediately just go build an exchange, or did you think the best way would be, go be a trader, go be a market maker? What was your first idea?
Yeah, so the first thing was actually just to, be to trade. And, that's the first thing that I did. Spent a year trading in the ecosystem doing arbitrage. And there were a lot of really big arbitrages to do at the time. There were a lot of opportunities, there were 10% arbitrages in some places, like the sort of spreads that you just rarely see. And so, basically saw that and felt like, all right, let's try doing some of these, see if they're actually real, see if you can really do them. And it did seem like in the end, like you could, like there were real trades to do. And, spent a year doing that before finally basically, deciding that the infrastructure in this space needed a real overhaul.
What were the exchanges that you were using to trade when you were trying to take advantage of ARB, and what was that experience like?
Yeah, it was, the biggest exchanges circa 2018. So you're looking at, Coinbase, Gemini, Bittrex, Bitstamp in the United States. You had Huobi, OKX, Finance internationally, Japan. There's CoinCheck and Bitflyer in Korea. There was BitThumb and Upbit, and that was sort of a lot of what the space looked like at the time.
And when you say that you felt that infrastructure was missing, or that it wasn't the exchange that you thought really needed to exist to do the type of trading you wanted to, what specifically was missing that led to, I guess, the idea of forming FTX?
Yeah, there were a bunch of things, but one of the biggest ones was just there was really in the space at the time not very good risk models. When you looked at the derivatives venues, most of them were not up to task. They were they were constantly losing customer funds due to poor risk management. and were not particularly safe places, all things considered.
So when did you form the idea of FTX, and how quickly did you try and go to market? Did you think it would be even possible to compete with the size of some of those exchanges? I mean, 2018, post that 2017 bull run, Coinbase is already getting pretty big. It's very well known. It's an established player. Same with Gemini. They kind of cornered the custody market. Did you think it was possible to build, a competing exchange, or was it just a let's try and see?
It was a let's try and see. I thought that there was a chance, but I thought the odds were more likely than not that we would fail, that we would just not be able to break into that space, not because of product challenges so much as, just trying to, get users, get attention, get, name recognition. Our best guess was that, 80% chance we would completely fail to get the traction that we would need.
And what was the way to first get people onto the platform? Was it novel products and focusing on things like derivatives? How were you trying to get those first people in the doors to just get into the FTX experience?
Yeah, I mean, there were a bunch of things that we tried, but in the end, the things that were most successful were just building a really clean derivatives product. I think, there were some novel products, but the core of it was just like, do a really good job at building cryptocurrency futures, to an extent that we felt like other players hadn't done in the space, and build off of that.
What were some of the biggest pain points when you were starting up FTX?
The pain points for the space, or the pain points for us in building it?
I mean, the pain point to the space was 2018 was just a bear market, and people questioning, is the asset even going to ever come back? You saw this 90% pullback. I guess, did that influence at all any of the friction trying to create FTX, or that wasn't a concern? It was more capital raise and tech.
It was not that big of a concern. The truth is that we were just grinding away building, and to some extent for a little while, it only sort of mattered if other people didn't fully believe in it. We could sit there still building, whether or not other people, however bullish other people were or weren't on the space. That was fine with us. And we got some users who were looking at sort of like relative market share. And if anything, I think that maybe it was a bit of an advantage growing up in a bear market, because it allowed us to focus on building instead of getting distracted by sort of short-term market opportunities, and allowed us to be able to compete in, it was probably a moderately less less expensive market to do so at the time.
Right. Was regulation an issue at the time, or I guess lack of clarity on regulatory rules in certain jurisdictions of what you could do, what you could offer certain types of customers, or is that not a concern really at that point?
It was always a concern, and the biggest way that played out was that we did not offer products in the United States for a while, because of regulatory uncertainty, and it wasn't until years later that we felt like we were prepared to try to approach US regulation. At that time, most other countries were still trying to figure out what their regulatory structures were. And it was only over the next few years that there started to be licensing opportunities for us to apply for.
Right. Have you found certain countries easier to work within, or that there were frameworks that were more friendly to crypto offerings?
Yeah, certainly. And I mean, I think in general, like smaller countries tended to move more quickly on building out licensing frameworks. Obviously, I'm in the Bahamas right now. And, one of the reasons that they're one of the first countries to build out a comprehensive licensing framework for crypto. I think in general, it's the small and nimble countries that have been more aggressive with building out frameworks. And so I think we've seen that, here we've seen that, obviously in Malta, Cyprus, Gibraltar, Singapore, and others historically. And now we're starting to see larger countries, make more of the move there. Japan has always been looking for, crypto frameworks. It has had, somewhat of a framework for a while. We're licensed there as well. But certainly, I think that the smaller countries had it easier to some extent here.
And have you found any countries that kind of flipped, on regulation, where they either took a certain position on various products or assets, and then later decided that they were going to regulate it in a different way, and then you'd have to redo the product. Does that create friction, or you haven't really experienced that yet?
We haven't quite experienced it yet, but I would expect we might experience that over the next year or two. I think that might be coming, and that, like, as countries transition from somewhat of a legacy framework to a sort of revamped one, I think we're going to start to see a little bit of that flip-flopping. And so, even if we haven't seen as much yet, I don't think that means we never will.
When you say a revamped framework, is this trying to map this asset class to the existing rules, or is it trying to be creative about how we take the existing securities laws and commodities laws and say they need a bit of a rethink because the asset class doesn't quite map one-to-one?
You know what the truth is? It's going to be all over the place, and there's going to be some of each. That's the honest answer, is that, we're seeing some countries take one approach, other countries take another approach. There isn't sort of one overall coherent framework that people are looking at here. And, we're gonna have to see how that all, in the end comes out, because yeah, I mean, right now we are seeing, we're seeing every approach possible. There are 200 different countries. There's basically no passporting and no coordination between them in crypto frameworks. And so, I think we're gonna just see a pretty wide variety of approaches continue to play out over the next year or two. And, hopefully eventually we'll see a little bit more of a harmonization. But I think that's probably more than we can hope for, while countries are still figuring out what their approaches will be in the first place.
What do you think the biggest task is to tackle it as a regulator? Is it now stable coins, and the attention is going to focus there because of the recent UST Luna fiasco? Is it figuring out what registrations look like for exchanges? Is it defining commodities and securities and what would be appropriate for retail investors to touch? Do you high grade or think that there's one thing that regulators should be focused on more than others?
I don't think there's one thing. And part of that is because I think that, on the stablecoin front, I think that's a really important one. I also think it's not one of the harder ones. I think, relatively speaking, there are fairly straightforward ways as a regulator to tackle the stablecoin registrations. I think, requiring audits is sort of a pretty powerful first step there. And so I think that's probably one of the first things that we're going to see rolled out. And then, over time, I expect that we'll see more, and we'll see, more sophisticated ones. But I think probably the biggest piece of this is going to be looking at basically exchange licensing, particularly derivatives exchange licensing. I think that's going to be probably the most important and most difficult piece of this. I think it'll be some time before we see, anything like global consistent frameworks for that. We're starting to see some examples of it, but not in a particularly consistent way.
What do you think to go to the stablecoin discussion for a moment, because I'm sure a lot of people who tuned in here are going to be curious your thoughts. How are you thinking about algorithmic stablecoins? And for anyone who on the call doesn't know that there's different buckets, there's kind of, in my view, 3 different ways you can do a stablecoin. And Sam, chime in if you think that there's a fourth or you disagree with one of these. You can do fiat-backed, meaning there's US dollars that sit in a bank account, and then you issue a token representing those dollars in a bank account. You can have collateral-backed, like Maker and Dai, where you're putting various crypto collateral in. Maybe you find some way to tokenize real estate, and maybe that can be collateral, and then a user can mint a tokenized version of a dollar. And then there's this third bucket of algorithmic stablecoins, which is what UST was, which uses a number of different ways to try and keep something to peg itself to a dollar. Is there a fourth category, Sam, that you would throw in there, or you think that that's a good 3-bucket way of describing this?
Well, one thing that I would say about those buckets, and I think that's a reasonable way of trying to tackle it, but one thing that I would say about them is that, when you're talking about the sort of like asset-backed versus the algorithmic, I think the big difference, all of them are backed to some extent by assets. And USD was backed to some extent by assets, particularly by Luna. I think that the big question is whether the assets that back the coin are in line with the pricing that the coin is expected to have. And so what I mean by that
Right.
is, if it's backed by asset X, is it meant to be pegged to asset X? Or is it trying to be pegged to some different asset, right? And where you start to get into a lot of trouble, I think, is when you have a coin which is, meant to be backed by, topically, which is, meant to be backed by Luna, but pegged to a dollar, because Luna is not stable in a dollar, right? And so that's when I think you start to run into problems. And I think that's where Terra ran into problems.
Is there a model that you think is the best or the gold standard that we should be looking into? Is it USDC? Is it something we haven't seen yet? What is the best way that we can get 100 billion plus of some tokenized or some version of a US dollar into the ecosystem that is the safest, and we don't have a collapse like this? What would that look like to you?
Yeah, I mean, obviously it depends on what your goals are, but I think, USDC is a super clean example to go with, right? Like if what you're looking for is like a US dollar backed stable coin that's just paid one-to-one by the dollar, I think that's, that's a pretty clean, straightforward example.
Would, though, that have to be issued by a financial institution, or can we have some new entrants to the space who would be able to issue those tokens? Or you don't really think that it matters who creates them, just that's the model we need to be following?
So I think that, the cleanest way to do it might have the assets stored at a financial institution, stored at a bank, like is true with USDC, but the actual issuing entity there is not a bank, right? And that's roughly the model that I would expect to make sense here, where there are financial institutions that are custodying some of these assets, especially on the fiat side, but where where, although that might be true as far as custody is concerned, that you don't need to have them done entirely by a bank from start to finish, mostly because you're going to run into problems there if no banks want to be in that business right now, especially, there might be a chicken and egg problem with regulatory clarity on that. And so I think that, like, we're probably going to see something like what we've seen so far, where we have, financial institutions which are playing some role in stablecoin issuances, but that there are private companies, standard private companies, that are playing a lot of the role as well.
Right. And how, when you think about stable coins, what is the relationship to a central bank digital currency, if there is one? Do you think that these things should coexist? Are you afraid of the idea of a CBDC? Do you think that the CBDCs should become the stable coins in this ecosystem? How are you thinking through these various options of what's coming down the pipe?
I think a CBDC can mean two different things, and I think it depends a ton on which one you mean. I think that to the extent that a CBDC is is actually a fully open network stable coin where anyone can write smart contracts on it, then absolutely it is a real competitor to stable coins. I'm guessing that's not going to be where these go, though. I'm guessing that what you're going to see instead is that the first CBDCs are going to be closed network stable coins, which are very much just like digitizations of the current financial systems.
Do you think it's possible? I mean, one of the big discussions these days is sanctions and making sure people aren't using any of these currencies, stable coins, crypto, for money laundering and terrorist financing. How do you achieve those goals while not crushing the innovation of creating these open DeFi, self-hosted wallet, smart contract like systems? How do we marry those two worlds?
Yeah, I mean, there's going to have to be a lot of work over time on that. I think that what we're going to see in the beginning, which I think is a pretty good first step, is basically that it's going to be in sort of the portals between, between the fiat worlds and the crypto worlds, that most of the focus on AML is going to be, right, on the exchanges, on the on-ramps and off-ramps, and ensuring that people can't move between worlds with dirty assets, combined with, obviously you have full on-chain tracking of digital assets, on blockchains, which helps a lot in terms of, basically being able to, provide clarity and transparency on what is happening to assets in the digital world. And so that's a framework that I anticipate we're going to see to start with, although over time, I think that there's going to have to be hard questions asked about what on-chain identity means.
When you say move between worlds, does that mean you're worried or that you're wondering if people will be able to withdraw from FTX or Coinbase to a self-hosted wallet, or they're moving between worlds where it's FTX to Coinbase through like the Coinbase trusts, where there's message passing about who that customer is and information about the state of the account and the addresses?
Well, so the first thing I meant by move between worlds was between the fiat and crypto worlds. So, moving between a crypto exchange and a bank account. But, there's also going to be eventually questions about, transfers between centralized venues in crypto and self-hosted wallets. And I don't think that the world yet knows exactly how that's going to work. I think that's very much still under, under discussion. But what I think I would expect is that we would see over time, obviously more nuance and sophistication of how people think about this in general, but I also think notions of on-chain identities being introduced more generally.
I mean, I've always thought that could you not just have, I mean, maybe it's not Chainalysis or another set of tools that's doing analysis of blockchain behaviors. You can assign some amount of certainty to when someone withdraws from Coinbase that's very likely, their own address, not that they're sending it to their friend. I mean, there's a few people who will send it to someone else, but it's very likely that address that someone withdrew to, a self-hosted wallet, is tied to the individual who was KYC'd at the exchange. Do you think that a way to approach this for regulators or governments, law enforcement, is just to look at tooling to say, if the exchange knows, 93% accurate that this wallet belongs to Brian, then we can watch all of the things that he did. And when he comes to withdraw, if there's any behavior patterns that seem to interact with contracts that are known to be, questionable, then you could do some investigation there. Is that a way to approach this, or is it to force identity onto all of the self-hosted wallets?
Well, there's a thin line between those, right? And between forcing identity onto them and having identity effectively, created by the exchanges as they look at transfers. And that first thing that you're saying is already happening today. It's already the case that if law enforcement reaches out to a crypto exchange, right, we'll talk to them about, well, here's the history, and we can start to create relationships between on-chain movements and identity. And so that's already happening. And obviously, I think that will continue to happen over time, and continue to grow out. But we might start to see something more formalized there, where some company like Chainalysis, as you said, starts to host, some amount of a relationship between, on-chain addresses and someone's, real identity. And, I don't think we're there yet as a world, but I would not be surprised if that became an important part, of compliance in the crypto ecosystem over the next, 3 to 5 years.
Do you think it's important for people to have self-hosted wallets and take possession of the assets and interact direct with, various smart contracts and chains? Or do you think most users are better off being serviced by a centralized platform where, you guys can filter out things that don't meet certain standards in terms of the code, in terms of risk model? Do you think that it's more important that retail customers end up on an exchange, or do you think for the education in the future of this space and technology that they experiment with self-hosted wallets and learn how these digital bearer assets work?
I think for now, certainly most of it's going to be happening on centralized venues. I think that is the easier interface for most people. And that's, what I expect to be the primary interface for most people over the short term. I think over the long term, it's less clear. And, I wouldn't be surprised longer term to see, more and more emphasis placed on, people learning about self-hosted wallets. I think that that's going to be coming. And I think that, especially when you look at payments, you're going to start to see a little bit of a thin line between those two when people, send assets from their account to someone else's account to pay for something. And so I think over time, we're going to start to see those blend together. But for now, I certainly think that most people are and should be accessing it through, centralized venues. Although obviously the people deepest in the space are going to be more prone to accessing it, through DeFi.
You just mentioned the payment the payment word, and recently you've gone on record by saying you didn't think Bitcoin worked as a method of payment, or I guess as like a day-to-day transactional currency. Why is that you don't think Bitcoin can function as that in society, or is it just that it's not there yet because of stability issues, or the wallet UI is not good enough yet? Where's the pain point of using crypto in day-to-day transactions?
Yeah, totally. So a few things to note there. The first is that there's a difference between Bitcoin the network and Bitcoin the token. The Bitcoin network is unlikely to be, the place where millions of transactions happen per second, because it just doesn't have that throughput. It just doesn't scale to the point where the whole world could use it to do payments at once. The Bitcoin asset, though, still could on Lightning or on other layer twos. And more generally, the crypto ecosystem absolutely could and should be used for payments, because there are a lot of networks that are fast in crypto and would make sense from that perspective. And so, that comment really was specific to the Bitcoin blockchain itself, which is not the fastest blockchain in the world, not.
I think it's actually the slowest.
Yeah, it may actually be the slowest.
It may actually be the slowest.
And so it'd be insane for that blockchain to be the method on which people were sending millions of payments a second. But again, the asset absolutely could be through Lightning, and more generally, crypto assets make a ton of sense to use on faster blockchains for payments.
And likely the first version of this, I think at scale, would you think it would be stable coins on some type of, I don't know, Ethereum L2 or Solana, or do you think it will be Bitcoin on Lightning? Which of those two do you think more countries will start to adopt at some point?
I'm guessing that, it's a good question. And, if I don't know for sure, but if I had to guess, I would guess here that you're probably going to first see this happening with stable coins. I think just like, it's a simpler leap for people to not have to worry about the pricing and volatility of the asset that they're transferring, and just be focusing on its just sort of focus on the blockchain and the transferring piece of this. So that's what I'm guessing will happen first.
When we think about people who are trying to start doing this, or countries that are starting to do this, so El Salvador is trying to use Bitcoin, I guess, on the Lightning Network, and helping their citizens figure out how to do it. There's obviously this huge knowledge gap. You and I eat, sleep, and breathe crypto. We're on crypto Twitter. This is our life. So to us, self-hosted wallets and how all this stuff works is easy. But there's obviously billions of people out there who have never touched crypto, or it still doesn't make sense to them. There's this huge knowledge gap. How do you see that knowledge gap closing, and taking this insane world and this bizarre lexicon of terms and words? Like, how do we make that easier for everyday people to participate in? Is it through just centralized exchanges and people get used to the assets there and they get normalized to it and they understand the volatility, and then they do a little bit of reading? How do we close that knowledge gap to make this space more accessible to people?
In the end, I think it's really hard to close it without trying things out. Like, you can do all the sort of theoretical investigation that you want, but in the end, just getting your hands dirty, clicking around, trying one of these products is going to be a much easier and more powerful way for people to learn what the space is like than any amount of sort of theoretical education could be. And so that's what I'm guessing is really going to be pushing this forward to some extent.
And kind of relating to this, we talked to a lot of financial advisors who are, of course, getting a ton of questions relating to crypto, especially in that second half of 2020 as we hit this new bull cycle. That, I don't know, maybe this bull cycle is coming to an end, but they're getting a ton of questions, and they're asking us at Ether Capital, where is a good resource for information, or what should they be telling their clients who are thinking about if they should be getting exposure to the asset class in a portfolio? What advice would you give to those advisors?
Yeah, I mean, I think what I'd say is, again, try everything out once, see how it works, get a sense for it. And try the major platforms, the major tokens, the major protocols, the major blockchains. That's going to be really, really helpful, I think. And then, read, get on Twitter, frankly, see what people are saying. Follow some of the bigger names of the space. And start small, start with what makes the most sense to you. I think it makes a lot of sense. Obviously not investment advice, but I think it's something that for a number of people, may make a lot of sense as a, small portion, but non-zero portion of their investment portfolio. In terms of, it being diversifying rather than sort of risk increasing to do at small size. And, you can build out over time from that.
What do you think some of the most common misconceptions are about crypto right now that you're still hearing constantly that you wish we could debunk?
Oh, there's a ton, and not everyone has the same ones, right? Like everyone's coming from a different perspective here, and we will hear completely different, I think, misconceptions from different people. But maybe to go through what some of those are, and I think that we'll hear a lot of people talking about crypto's market performance sometimes, frankly, and do so in a way which isn't looking at the rest of markets, and is forgetting that just markets in general are down an enormous amount, over the last few months. And, the sort of moves that we're seeing are not crypto specific. They're just everywhere. So that's one thing that I think, we see happening, and I think people are not always super perceptive about. I think that, when you look at stablecoins, I think it's really important to distinguish, as you said, between different types of stablecoins, right? And there's absolutely real risk during large market moves for algorithmic stablecoins. That doesn't mean that the same thing extends to fiat-backed stablecoins. That's another thing. On the anti-money laundering side, there's a lot of worry in general from people about people using money laundering, using crypto for money laundering. When you actually talk to the people on the ground here, when you talk to, frankly, the people in law enforcement who deal with this day to day, they will generally say that they do not see a lot of money laundering happening, using digital assets, and that, it's something that we absolutely need to stay vigilant, about and attentive towards, so that it doesn't become a significant source of it, but that it isn't one today. I think you'll see that pretty consistently. We've seen that said by, by Treasury, and other places. And, I think that generally, it is not, it's not easy to use an asset with a globally traceable, transparent ledger to launder funds. It's not surprising that this has not been used that much by illicit finance, and I think you would expect that lack of trend would continue.
So going back to the discussion on what financial advisors should be doing, and just as you were saying, retail investors should just test things out, try things, just experiment. What was your investment thesis, overall strategy to the space when you first entered in 2018 and began trading? And what is your thesis now of how to assess assets and what you want to include in a portfolio? Is it a long-term view? Is it a short-term view? And you're just, momentum trading and looking for arb opportunities. How are you approaching it personally?
I'm not spending time doing sort of day-to-day trading anymore. And so from my perspective, I'm looking at it from a much longer time scale now. And I'm looking at it much more from the perspective of, how, how should we be looking at the value of various assets longer term? And, I think looking at companies, looking at tokens, and trying to think about what should we be focusing on? Where are potentially, powerful investment or acquisition opportunities? And how do we make sure that we're positioning ourselves correctly for what the space is going to look like, not just, tomorrow, but a year from now or multiple years from now? And so that's been what I've been focusing on the most recently.
Do you think that points towards a focus on the blue chips of crypto strategy and ignoring the kind of flavor of the month tokens, or, new coin has dog, buy this one? How are you assessing what in 5 years do you think is valuable?
Well, it depends. And I think that, what it really depends on more than anything else, is why something is sort of flavor of the month, right? And is it flavor of the month because this is a powerful asset that is just starting to take off? Because if so, then I think it makes sense to think a lot about it. Or is it flavor of the month because whatever, there are trends and this is just another dumb trend that is going to go away soon, in which case absolutely you want to just not bother with it much. So I think the answer really depends on the specifics, and we've seen lots of examples of both of these.
What is the worst trend that you've seen in your time in crypto, and which was your favorite trend in terms of fun?
Boy. Yeah. Worst or favorite trends in terms of fun. So I would say that the oh boy. The favorite trend I think was new L1s getting traction, because I think they represent really powerful opportunities for the future of finance in the world. And I think that's been great. And I think also just like greater focus on regulatory compliance and on regulation and what the future of the space will be has been great. I think the dumber ones, I mean, I think that there are some really cool things about some yield farming. I also think there are some really dumb things about a lot of yield farming. And I think that like the space got too into yield farming and too into blockchain gaming as just concepts in and of themselves. I think that like if combined with really cool protocols or games, that it can be really interesting and valuable. But I do think that the space got a little bit distracted by them as just sort of like ends in and of themselves rather than as tools for what would hopefully be an otherwise powerful product.
And to pull metaverse and NFTs into this discussion, are you bullish? Are you bearish? Do you think we're still too early and we'll see in the next cycle, what plays out and what really has meaningful value? How are you looking at those two assets or those two verticals in crypto?
I'm bullish long term. I think short term, there's a lot of improvements that need to be made to them before they're going to become what they could be. I think that they're pretty messy right now. And I don't know that they're there yet, but I think it'll get there. And I think that, having interoperability as an example is just really, really powerful.
What are your thoughts? Last few questions here, and then we'll go to the chat or the Q&As coming in, or the Q's coming in that you'll give the A's for. What are your thoughts on the transition for Ethereum from proof of work to proof of stake? Are you bullish proof of stake? Do you think proof of stake is better than proof of work? Or are you agnostic? How are you looking at this event in crypto?
I'm certainly bullish that transition, in part because I think that Ethereum is meant to be a smart contract network. It's not meant to just be a store of value. And because of that, it's going to need the throughput that you get with proof of stake. And so I think it's a necessary thing for Ethereum. It's definitely taken a while. And I think that process has been quite a bit messier than maybe ideally it should have been. But I do think it's an important and a necessary one.
Do you have thoughts on the kind of Solana versus Ethereum discussion? You've seen Solana, have moments in the limelight where it's done really well, and a lot of interesting projects get built there. It's cheap, it's fast, people are building DeFi applications there. But then there's times where Solana goes offline or the network needs to be rebooted. Do you think these are just hiccups along the way? You're grinning. You can't grin yet. I'm not even to the full question. But do you think that these are just hiccups along the way and it's still a very new network and all of this technology is new and there will be moments of pain for all of these protocols? Do you think that we'll have multiple layer ones with bridges and various communities in each of these protocols? Or do you think over time people will just gravitate to one and it'll be one ecosystem with maybe some layer twos, but we're not really going to have a multi-chain future the way people envisioned a few years ago?
Yeah, so I basically think that trying to have a decentralized protocol, a decentralized blockchain that handles tens of thousands of transactions per second is currently difficult and on the cutting edge. And any chain that tried it would have difficulty. Any chain that tried that, that's not to say that it necessarily would or wouldn't work, but I think it's hard. And I think that we saw that it had trouble because it's a hard problem. And I think that that's going to continue. This is not going to be something that's that any chain is going to be able to trivially do tomorrow. And so I don't think it's super Solana specific. I think it's mostly specific to just being ambitious. And I think we're going to see improvements over time in Solana and in other networks that are trying to massively scale. I don't think any are at the point yet where they can be thinking about millions of GPS. But hopefully they can over the next 3 to 10 years.
A couple personal questions here. One, so obviously recently you taken this position in Robinhood. What was your motivation behind that? Do you see it as another access point specifically for crypto? Is that why it was interesting to you, or do you just think it's undervalued? Why make the investment in Robinhood?
Yeah, I mean, the core thesis was just that like it seemed undervalued, like it had gone down a lot since its peak, and I think that it has a lot of more upside than downside left. But we're always excited to have conversations, and conversations with them about ways that we could potentially work together going forward. Whether it's a product collaboration or something else. So always open to where it could go. But the original core thesis was just that its enterprise value got quite low.
And kind of in the same vertical, you've been pretty public about that at some point in your life you want to donate most of the money that you've made, or all of it. Where would you donate it to, and why do it?
Yeah, I mean, in the end, and maybe I'll do the second one first. I think that there's massive positive impact that we can have on the world if we try. And I'm really excited to do that, and really excited to help try and make the world as positive as it can be. I think that's what matters the most in the end, and it matters way more than anything I can do for myself. My goal is just maximize my positive impact on the world. As for where that ends up, we'll have to see. And I want to be nimble and adapt over time to where it seems like the biggest opportunities are. But I think that some of the places I'm looking at the most right now are, for instance, pandemic prevention, where we were not ready for COVID. We are not ready right now for whatever the next pandemic will be, and the next pandemic might be way nastier than COVID was. And so I think it could be destabilizing if we don't get our shit together on that. And so that's probably the thing I've been thinking about the most recently, but interested in a wide variety of potential causes.
I'm going to go to the Q&A that's coming in here, and we're based in Canada. A lot of the people who've tuned in today are probably from Canada, and so kind of two of the questions that are at the top of the box here are people asking, how closely is FTX or your efforts following the regulatory status in Canada, what the state of the markets and exchanges look like in Canada? Have you engaged in conversations with regulators, or how are you seeing that environment or that jurisdiction shaping up? Or do you think that it's still a global conversation that needs to be had between all these jurisdictions on how we're going to regulate the asset class?
I definitely think that there's a global conversation. There's also a Canadian one, and frankly, within Canada, there's both a Canadian one and there's a province by province conversation as well, because there are security regulators separately for different provinces. I know that the Ontario Securities Commission has been actively looking at this space as well. I think that it's a long process. It's going to be a long process in Canada. It's going to be a long process in other places. I think in anticipating that there is not going to be a lot of really kind of big short-term movements in the Canadian regulatory environment for crypto. I'm optimistic longer term that there is going to be rollouts of really clear frameworks for it, but I think that's going to take some time. And I think that we're excited to get licensed to the extent that that is a possibility, and that is that's something that there's a pathway for in Canada. I think over the next 3 to 5 years we're very likely to see that happening. I think short term there's probably a lot of cleanup and a lot of sort of decisions that regulators in Canada, but frankly in a lot of jurisdictions, are going to have to make before they feel like they have clear frameworks.
One of the questions that came in the box is referring to custody. Can you talk a little bit about how FTX currently does custody, and if you think things like MPC, which for anyone who doesn't know stands for multi-party computation, is that the method going forward? Do you see people, the specific question here was, will FTX explore building an MPC-like semi-custodial experience to reduce friction to Web3? So maybe we can just talk for a couple of minutes about custody and the different parts of the spectrum that users can touch assets on, and how the security of that custody method would work.
Yeah, absolutely. And there are a few different approaches one could take here. I think there are pros and cons to each. One thing that I think is really worth noting here is that it's one of the core questions you have to answer is the custody going to be the same place as the trading venue or not? In crypto today, most people store their assets at an exchange, at the same exchange that they're trading on. If you look more generally at the financial ecosystem, often that's not the case. Often there are sort of separate custody and trading venues. I would guess that we're going to continue to see those tied together in crypto, but I don't know for sure. I think that it frankly does make a fair bit of sense to do. And I think that it allows, in some ways, a more efficient system. But we'll have to see about that. In terms of what method people are going to be using for custody, what algorithms like, I think that there's probably we're going to continue to see this distinction between sort of colder storage and warmer storage, where most assets are stored in something that looks more like cold storage, and it is safer, but that there are some assets that are stored in warmer storage because that's going to be much faster access. And so that's going to be a position where people could much more easily sort of and quickly access funds. And I'm guessing that we're going to see both of those, that we'll continue to see both those going forward. And we'll see exactly how all that shakes out. But I don't think it's a one size fits all type system. And I think that there's going to be a regulatory element to this as well. I think that we're going to start to have regulatory oversight of custody. I think we're already seeing this in some places, but we're going to see it in more and more. And I think that will provide people with further comfort.
We didn't really talk about DAOs. These are ways to coordinate capital natively on a blockchain. Someone asked in the chat here, do you believe that there's a meaningful distinction between a DAO and a corporation? And do DAOs represent anything more than a corporation that currently does not fall under established regulations?
Yeah, I mean, I think there's similarities. I think there are also differences. I think when you look at DAOs, the ability to directly impact on-chain activity is obviously a difference. And I think that there are a lot of interesting open questions about what happens when there, if you, for instance, had differences between what a legal contract would say and what a DAO's on-chain code would do, and what maybe the base law is. And so I think that there are going to be messy conversations that need to be had on how those intersect with each other over time. And I don't think we're at a place yet where we have sort of like confident answers to them. But that's going to be an important area. I think that so far we haven't necessarily seen particularly impactful uses of DAOs, but I do think that they will probably be coming. I think that's probably not a permanent status. And when they do, I'm excited to see how that happens.
Another question that came up here from the same person is talking about DeFi and being able to offer innovative products that I guess also fit this regulatory set of check marks. And what they're specifically asking is, what are the biggest challenges that are going to need to be addressed if we want more people actually touching DeFi, touching those smart contracts, those DEXs, those lending products? And do you believe that these products offer significant and meaningful benefits over the centralized models that we have in traditional finance or through an exchange today?
There's a lot of interesting questions. Some of these are about DeFi in particular. And I do think that there are some things that are, a lot of things that are going to need to be addressed there. I think around like, what does, who faces who in a transaction? That's like not super clear right now. And, from sort of a legal standpoint of what the relevant entities here even are, I think we're going to see further thought and work on that over time. And I think that there are going to have to be, regulatory frameworks that interface with that and make some decisions there. So I do think there's sort of like hard decisions coming there effectively, and impactful ones. Outside of that, I mean, I think that like, we're going to see, we're going to start to see over time, more general impact of crypto market structure on general financial market structure. And I think this goes beyond DeFi. I think that the sort of direct equitable access that crypto has traditionally had for markets is frankly really powerful, and is something that I expect will start to spread to some extent into other markets. And I think it's healthy and powerful for it to do so.
Kind of ish relating to that, a couple questions have popped into various places here about Tether. One, in just Tether's general either reputation or what it would look like if a big four accounting firm were to do an audit on Tether, and then also the relationship or impact it may have on the centralized set of exchanges that list Tether. Do you have any thoughts on Tether generally and where you see it going? I mean, it's been part of FUD for crypto, I think, since 2013 or 14, whenever it first existed. How do you see Tether playing out in the next few years?
I think that we've seen a lot, successfully redeemed over the last, week, which I think is frankly bullish for it, from the perspective of it being able to prove that the assets were there to be redeemed. I think that I think it would be big if it had another, full audit coming out. I'm optimistic that could happen sometime soon. Although obviously that's gonna have to come from them. I think it's fundamentally something where a lot more transparency and audits would be extremely valuable and would go a long way. I think it's also something where, many of the sort of more severe accusations that are made against it are overdone and probably not accurate. And so, it's a complicated one. It's something that I think needs, is nuance. And I think that discussion often lacks nuance in public forums.
Do you think that we'll start to see more insurance products coming out through exchanges or on custody in the next few years? I mean, right now, there's really not meaningful one-to-one insurance on a large amount of assets. You can get a couple $100 million, it's very expensive, but now we have custodians that have 30, 40, $50 billion, in their control. What kind of conversations are you having with insurance companies, or how do you see that shaping up over the next few years?
Well, I think when you talk about insurance there, the thing that I think you're going to run into is, why would you trust the insurance, right? If you don't trust the assets in the first place, who is insuring it? What's backing that insurance? In what cases do you think that insurance will actually pay out? I'm not saying that there's no answer to this, but I think it's complicated and messy, and I think that that's often sort of elided in these conversations. And and I think the actual answer is that if you don't trust the core product, I would certainly want to take a long, hard look at what that insurance was, to think about why I trusted that more. I don't want to say there won't be any, because I think there absolutely might be. But I also think that this is that the history of insurance in crypto is not particularly robust, and that people sort of point to it as a bit of a panacea without thinking carefully about what it is or why it is what they'd want.
Just to bucket this a little bit, are you talking about Lloyd's of London providing insurance on custody, or you're talking about on-chain insurance smart contracts? Where
I was talking about the former. Were you talking about the latter?
I was talking mostly about custody, but I feel like part of your answer was geared towards on-chain. How much do you trust the smart contract, or something like a mutual that's trying to be done on Ethereum to ensure failure of smart contract or some type of lending product. Are you in favor of one more than the other, or you think just in general people need to be thoughtful about who is providing that insurance, what the level of insurance is, look for transparency and disclosure, and then decide if they still want to use the product?
Well, I think that I think frankly that the on-chain insurance contracts are actually really cool, and I think that that's I think those have a lot of potential to create really transparent systems for insurance, and totally in favor of that. I think when you look at the insurance for centrally custody crypto assets, I think it could be powerful, but again, I think you're in a little bit of a position where you have to ask questions about what that insurance actually is, what's actually backing it, and why you trust that more.
So we're coming up to the top of the hour. So I guess last question here. Let's go back to FTX. Where do you see it in the next 5 years, the next decade? What do you want for the company? Will you ever retire and sleep?
I don't know about that last one, but no. I would love it to become a global financial powerhouse and to be on the consumer side able to offer a powerful suite of tools that allow people to manage their own finances, and I think on the institutional side to become a direct equitable access trading venue that provides deep liquidity, and I think there's a lot more that we have to do to get there, but I think there's also a lot that we have been able to do that I'm excited about, and just keep putting one foot in front of the other here.
And is this all you think the future going to be based in Bahamas? Is this the final stop for you guys?
I think we're always going to have a big presence here, but I think we're going to have presence in a lot of places. We have a Japanese outfit now, among other things, and I think that's going to keep expanding where we are.
Well, I'm going to, it's 12:59 and I know you got to hop, but I'm going to say thank you so much for joining us today. I'm going to get back to permissionless and you're going to enjoy the weather in Bahamas and keep working. And again, thanks for joining and hope everyone learned a lot, and talk to you soon.
Thank you.
Bye,
Thank
everyone.
you, Sam. Bye.
Bye.